With rates increasingly rising, the risk of a recession is becoming more and more likely. From mass job layoffs to bigger debts, there's a lot to prepare for. And our personal finance expert, Rabina Ahmed-Haq, has some tips to help us avoid feeling that big hit from a possible recession. Good morning to you, Rabina. Let's get right into it because we know Canada last experienced a recession back in 2008. There was a lot of stress, a lot of economic impacts, including job losses. So what's pushing us towards another recession? And when we're talking about job losses, would that impact only certain industries?
Yeah, that's a really good question. There are industries that are already facing job losses. For example, in finance, some of the smaller financial tech firms are laying people off because the markets have been doing so badly this year, and there isn't as much need for their talent, and so they're laying people off in those sectors. The jobs that are gaining are those in the lower income, so restaurant, hospitality, travel, and tourism. And in fact, those salaries are rising faster than any other group. If you want to work in a restaurant and there's demand for you, you can go in and say, I'd like to have a higher salary than just minimum wage. And restaurant owners are more than likely to give it to you because they need that. They need those people in those restaurants so desperately to run their business. The risk of recession, Marianne, really is increasing with the rising interest rates. Next week, we hear from the Bank of Canada likely going to raise rates by 75 basis points, which is going to be a mega hike. We haven't seen that in many decades. And there's also some banks, JP Morgan in specific, saying that a 1 percentage point rate hike is firmly on the table. So definitely a news story to watch next week because it will affect Canadians' pocketbooks, especially those who have line of credit debt and variable rate mortgages.
Yeah, and when we're talking about specifically when a recession could be declared, of course, we don't have an exact date. But of course, you still say it's a good idea for us to be prepared. So what should we do?
Whether it's a recession or an economic slowdown, the economy definitely is going to slow because of higher interest rates. And one of the things that get Canadians into trouble when the economy slows down is debt load. So if you are already struggling to pay your mortgage, this is not the time to take on more debt. So many Canadians have taken out home equity lines of credit, which is easy money to tap equity in your home to renovate their home, buy furniture, do other things. This is not the time to tap that money, even though it is cheap to do so. If you are worried about your ability to make your payments, if you can afford it, make some lump sum payments onto that debt. That's going to bring your overall debt obligation down and not hurt as much when interest rates rise. And the other thing that people can do, which is more to do with work, is if you can, talk to your employer about going back to work in person. This is, I know, not a popular opinion. Most people want to continue to work remotely or hybrid. But over the years, what I've observed is that FaceTime really does matter in a job. And if you're worried about your ability to keep a job during a recession, if you're in the office, you may be less likely to be laid off than the person working remotely.
That's an interesting take, Rabina, and really interesting to think about. Let's talk about, though, paying down that debt. For those who have a lot of debt but can't pay it down right now, what other options do they have?
So absolutely. They may listen to this and say, Rabina, I can't go back to work in person to secure my job. I don't have any extra money. So where am I supposed to find this lump sum payment that you're talking about? Take a look at your variable spending. So the money you spend day to day, week to week, month to month, make some micro changes to the way that you are spending in order to find some of those savings. Where do you grocery shop? Where do you buy your household items? What activities do you put your children in? What do you do with your family on a Friday and a Saturday night? These are places where you can really find a little bit of savings day to day that is going to add up to a bigger sum. And going back to that work piece, Marianne, if you have skills that are in demand, one of the ways that you can make more money is by actually changing jobs. There are surveys that show that highly skilled people who change jobs, even to the same job but in a different company, can renegotiate in some cases a salary of up to 20% more. So that's a way of finding more money to pay those debts down. But that's, of course, a more gutsy move than just trying to cut back on your weekend spending.
Definitely, but could work for some people. But let's talk about this recession. We're bracing for it. How long could it potentially last?
So recessions are normally short and sharp. They don't last, technically a recession is 2 quarters of negative growth. So 2 3 month periods together where the economy contracts rather than expands. Recently, the Canadian Centre for Policy Alternatives put out a note saying that we are definitely headed for a recession because of what's happening with interest rates, with the Bank of Canada raising rates so aggressively. That's not the consensus. Not every economist believes that, but we are headed towards an economic slowdown. And in a recession, for example, even though they are short and sharp, what happens is that if you lose your job, for example, and it takes 2 years for you to find employment that has the same kind of income, that individual suffers more because they might have to change where they live, they might have to change the car they drive, their lifestyle in general. So the recession may be short, but the effects of it can be really long, especially on those individuals who lose their jobs during those economic downturns.
And as you mentioned earlier, so different depending on what sector you currently work in or where you're trying to find a job. Thank you so much for your insights this morning. And of course, everyone tune in weekly for more personal finance insights from Robina. Thanks so much.
Thanks for having me.